All right, what is up, everyone? Freshly back from Vegas for Traders for a Cause. What an incredible weekend that was. If you've never been, highly recommend it. Just so much great fun, so much great networking, so much great education and people to learn from. Overall, A+ event. We're a little bit tired today, but here we go. Recording October 23, Top Ops Dissected. As usual, I tweeted those Top Ops out. I think overall October was one of the slowest and more difficult months of the year. Many seem to agree with this. In my opinion, I think TLT on the Bill Ackman tweet was the best op of the month by far. Nevertheless, there still were some singles to hit, and I'm going to go through them, and we are going to start with Tesla, and this was on October 2nd. Really, the first couple days of each new quarter, Tesla tends to release their quarterly delivery numbers pre-market. I don't think it's necessarily on any specific day, but it's just one of the first couple days, and you guys can go back historically and check that out. And this is just a very simple kind of binary catalyst in a stock that tends to be very volatile and as basic as it comes with the breaking news trades. Really, if the number is a miss and we start to go down, you want to short it as soon as you can, using the initial stop as the unaffected price. Obviously, if the numbers are way better, you want to try to buy as soon as you can, using a stop as the unaffected price. And then you just want to do that trailing prior bar highs as a stop. This allows you to catch a pretty decent leg pre-market in this name. And so this, I would say, is like a just pretty basic kind of textbook breaking news op. It's something that's replicable, it's something you can prepare for, and it's also something that, due to it being pre-market and not really kind of advertised as a specific date, it makes it a little bit of a competitive advantage if you're just in your seat ready expecting this. So next, we're going to discuss Rivian on October 4th. And so what happened here was Rivian ended up announcing a huge convertible offering after hours. And this was a really nice liquid breaking news trade. Rivian tends to be super liquid. And I would say the beauty of this, if you're really following along and doing your Evernotes and your databases and your documents, you had a really beautiful comparable a couple weeks earlier. And that was that NIO did their convertible offering announcement. And what happened on that announcement? The ticker totally tanked. Not only did it tank upon the news, but then the whole next day as well, it absolutely melted. So if you're really paying attention to the news, if you're really being diligent about documenting everything, it really set you up to be prepared for like, oh wow, another EV company, this one of course being American rather than the Chinese NIO, but it really gave you something to base this off of. And of course, right, convertible offerings are just dilutive offerings for the most part. You want to short that, and again, same traditional stop as always, just those prior bar highs, and this catches you a really nice move after hours that day. And so then we actually then have a really nice setup even on the next day, and so that is on October 5th. And this is just your basic everyday technical analysis setup on a in-play stock. Super clean support level. And again, you can have a short bias on this largely after seeing what NIO did, where that really just melted and faded all day. A lot of these stocks had bounced a lot over the last couple months, so there's some meat on the bone in this. And we make a really weak, steady move off the open. Now, one of the keys here is there's no price or volume capitulation. It's just super steady, right? And so because of that lack of price or volume capitulation, that makes me think further continuation might be possible. Had this really panicked out and capitulated, I might have thought differently. But we kind of do essentially that bouncy ball setup where this just kind of off of that support, this then proceeds to make lower lows not lower lows, but lower highs against that support, consolidate for many hours, pretty much most of the day. We then break it, and that is just a beautiful entry on an in-play name. And you really had a great analogy in NIO that this could just unravel like that. So I felt that this is just, the after hours setup the prior day, and this are kind of just textbook simpler layups. Now we're going to move on to the NFP number on October 6th. So prior to this number, the market had started to come back into play with renewed fears of rising rates, and the market had been moving on those economic numbers. And so really, it's just the same playbook as CPI back in 2022. You really want to go with any big misses using the unaffected price as the initial stop, and then prior bar highs as the trailing stop. The whole thought, right, is based on the economic health itself. That's going to have an effect on rates, and those interest rates and the Fed's actions will then of course have an effect on the market. So much like with CPI, you can kind of just pick your poison. Some people might want to go for the spiders, some people might want to go for the Qs or Tesla or SMH. Obviously the higher beta tech stuff is going to tend to move further. So you really want to just find what's ever going to provide you the best liquidity and speed and mix of it. But I would say, like, yeah, this isn't some huge month maker, but there's definitely a play to be had. And the concept of this really isn't so different from the Tesla number, the deliveries number. Why do I always try to connect the dots to different plays? Because that's what you all should really be doing in your head. Like, you really want to think of all these as analogies for each other and think, what are the comparables? What can I compare this against? And you just want this huge Evernote database, but also mental database that you can immediately pull on. What that does is it allows you to catch themes like in TPST. And so what had been going on is a lot of these low float microcap biotechs had really been ripping on pre-market news ever since that VTGN crazy Widowmaker play. And so what happens is pre-market TPST comes out with liver cancer data for their TPST 1120 drug, and then this ticker is definitely then in play, and you got to keep an eye on it as a result. We make a nice charge off the open and like through the morning. Then we have a really nice consolidation and start to curl higher. Then boom, after hours of consolidation, we break to highs. So I did a TikTok video on this, and so I actually like that first break around $5 using prior bar lows as a stop. But what I don't like is that final break right before the close. Just because we do not consolidate enough. And like, yes, it works, but that would be very scary to me to be holding that kind of, especially into the close where you might lose some of the liquidity. And so yes, that second breakout by the close ended up working, but it's still worth studying my thought process where, like, in general, I want a level of consolidation as seen kind of where that first yellow circle is. That's really an appropriate amount. It's a nice consolidation. It starts to tighten into the move. That I feel very comfortable with. That kind of just huge gap into the break that we see right at the close, that scares me. The other thing not to be overlooked is this actually had a really kind of nice head and shoulder pattern after we capitulate to the upside. We definitely have like that little death candle spike down, like I kind of cover in the TikTok video. And then once we roll over, that's just a beautiful head and shoulder neckline break that you can then trail using prior bar highs. It's so important to notice in these videos, a lot of these technical patterns work. So then why is trading so hard? Because it's not that these technical patterns always work, it's that they tend to work and have edge in very specific spots, right? And the reason why these work and the tickers I'm showing you is because of how in play they are, right? Rivian was extremely in play. This ticker is extremely in play. Everything we ever discuss generally has fresh news catalysts or is doing huge moves or is huge volume. It's not as if I'm finding like the random bullshit ticker of the day and looking for head and shoulders or support levels. Those tend to be noise. In super in play tickers with proper consolidation and everything else, it tends to have edge, and that's the really big difference that most people miss. Now we're going to jump to ticker MTC, and the point I really want to make with this beautiful setup is that MTC had a massive $3 resistance level on the daily, despite this being a little bit of a bullshitty chart. And so normally I would think about fading this, but the chart never lies. And what happens is we start to ramp up on 10-20, the daily and the intraday end up aligning, where intraday we have super clean resistance at $3. And again, like, I don't want to let my biases ever steer me away from just listening to the chart. And so what you find is that you have that $3 daily level. You then end up finding beautiful resistance at $3 on the intraday. We consolidate, then we just kind of rip through that level, and that is a beautiful entry, because so many people are probably short this thing after it had ran, but we're not, like, we don't capitulate. We're holding up super tight. We have a super clean daily and intraday resistance level. Like, that is an A+ long, really. And massive volume comes in on that break. So I can't stress that, right? You have your main time frames aligning. You have a super tight chart, super clean level, and huge volume volume coming in. Like that is a beautiful technical break. We're then of course going to trail it with usual exit. And what ends up happening is this then capitulates higher on pretty massive volume. So you can choose to sell into that parabolic move. You can potentially even choose to intelligently short into that. But then once we break prior bar lows, you definitely want to get flat. And given the scale of this move on the daily and that capitulation, this is well worth considering for a short. I believe borrow is quite hard to come by. So, you know, if you can't get borrow, no big deal. But I think a lot of people would overlook that long and not even consider it. So really, really good play. And the point I want to make is just the importance of aligning multiple timeframes, the importance of being open-minded and not having too much of a bias. So that's a really, really great example. Next, we are going to go to Okta on 10-20. What happened here was Krebs issued a blog post that Okta suffered a hack. Most people, I'm sure practically everyone watching this video is probably not familiar with Krebs on security, but he's actually a very reputable source that has been breaking a ton of hacks over probably the last decade. Like he's somebody I've followed my whole career. And so that's where you start to build up these massive databases of niche sources like Krebs as someone who can move stocks. And so he released a blog that Okta suffered a hack and a vulnerability and that some data could have been compromised. And especially, you know, again, this isn't just your random everyday company. This is a cloud software company. So a lot of its users and customers might really start to have worries over something like that. So yes, you can short that initial headline if you're following these beautiful niche sources. What happened is stuff like this doesn't immediately get so distributed. And so we kind of just fool around and I think we even got above the unaffected price. So you might end up stopping out there and that's okay. You can always reshort as volume comes in and as this starts to get more cleanly distributed. But even if you miss that initial leg, it's okay, because what you find is the volume only got bigger and steadier, and we really, really set up nicely for a roll below 79 bucks. So normally I wouldn't like that short because it's just not enough consolidation for me. But the only reason why I could be convinced to short that is because the prior bars are so tight against those lows, and the volume is continuing to steadily increase. Like that's a super rare sign. And this is the type of news that really just probably takes time to get disseminated, given it came from such a niche source. So I do think that's worth that rollover short and then using the typical stop. You can even potentially cover into that down move because we are starting to get a little capitulatory. I don't think it's a no-brainer cover because it's not so full waterfall, but the volume definitely is escalating and the price is definitely accelerating. So either way, this was really interesting. And I think the unique point I want to bring up with this play is the beauty and possibility of using options for this one. This occurred late in the day on a Friday, and it's a big enough company where this had 0 DTE options available, and you can just super crush something like this, especially on news sources that take time to get disseminated. That's almost just like the low-hanging fruit to say, okay, I think this news could be big. I think it might move choppily or be slow to disseminate. So what I'm going to do is I'm okay risking 5K in premium or maybe 2K in premium or 10K in premium and really trying to go with this, especially as that volume starts to come in, because that was real deal. Cool, interesting, very under the radar breaking news headline there. And also the use of options are why I thought that one was so important. And now we're going to get to what I think is the biggest and best stop of the month, which is TLT. Bonds had been oversold on the daily, getting crushed for months, with the last leg starting as Ackman announced he was short 30-year bonds. And so then what we get on the morning of 10/23 at about 9:45 a.m. Eastern, Ackman tweets out, "We covered our bond short." And this is so huge because Ackman had been one of the most vocal bears on that 30-year bond leg lower. And so when he says that he's covered, like this is a huge change in sentiment. And that's also a news catalyst that meets my CNBC heuristic. In other words, this is the type of news that is going to be so big that it continues to create this feedback loop as more and more people follow this, right? Your average hedge fund manager is not sitting there following Ackman on Twitter, right? So you all as day traders have the very unique ability where you're in your seat and you can really be the first to see that and know that, wow, this is gonna have a feedback loop where pretty much by the end of the day, CNBC, Reuters, Bloomberg, everyone's gonna be touching on this. So a great opportunity is getting long, of course, on the initial news. And the other thing is, you know, playing some of those roles higher. And again, always the same kind of traditional stop using prior bar lows. But the other really big brain move to think about is as these bonds bounce, after being so oversold, this is the type of thing that can create a sentiment change and a reaction even in the overall market, because the market had been selling off so hard with that bond move lower, right? So that's something where you can really go into some of those high beta names, again, like the interest rate sensitive stuff, triple levered Qs, SMH or levered semis. You can also go into Tesla, and you can really deploy huge amounts of buying power into something like this, especially early on, and catch quite the move. The other thing I want you all to consider is, much like with MSOS a couple months ago, some of these CNBC heuristic plays, again, because of that feedback loop of this news circulating and circulating, this also makes the possibility for a nice swing. And this TLT did end up continuing that next day. So again, for those reasons, I really think you could have deployed a huge amount of buying power into this play and really caught some nice moves in a lot of instruments. And for this, that was probably the best home run. I then want to finish this up with Ford. This was on 10/27. And so this trade is very similar to the Nikola on August 4th that I've previously done a video on, and also very similar from an intraday perspective to the Rivian intraday trade that I discussed earlier in this video. Again, it's so important to always be connecting those dots and making comparisons and analogies. And so what happened was we had earnings the prior day after hours, and then we were gapping down below the huge $11 daily support level. And so then that's a short on the daily, but I still need an intraday setup. And what we see is that the stock melts off the open and we drive lower. But what we don't do is we don't capitulate in either price or volume again, right? It's just a steady downwards move, and we set up that kind of bouncy ball short against 1020, where we proceed to kind of just make lower highs against it, and then we eventually break 1020, allowing you for a really nice short. The only downside of this trade was just it was in short sale restriction mode because it was down over 10%. So that can make it a little bit harder to get short, but then using prior bar highs, you kind of have a really nice, you know, just 15-cent leg. Not a home run, but definitely an easy money trade with a lot of comparables. So that kind of sums up my take on the month. And again, now that I've done a couple of these videos, you can really start to piece together the themes, right? A lot of the breaking news follows the same pattern. A lot of these technical setups follow the same pattern. And the more we do these and the more we review and the more we build databases, the easier and easier this gets. So I hope this helps. Any questions, feel free to give me a holler. And thank you all so much for watching.